Hello and welcome to Pro Trader Strategies market commentary for Friday, July the 24th. And I'm Eric Wilkinson, and you very well may recognize me from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that impacts the overall markets with my market analysis. And I do the same thing in these daily market commentaries, but I go a little bit further and talk about my portfolio and how I'm implementing options in and around that portfolio to increase that overall yield. So one of the best ways to increase your probabilities and increase your yield in that portfolio at any given time. And I talk about those details, the real guidelines we need in order to set up an option strategy around an assumption we come up with from our economic, geopolitical, and market analysis. So make sure you check out those webinars at protraderstrategies.com, because I try to break it down into those guidelines that you should follow in order to implement an option. It's not just going out there and having a bullish assumption and buying calls every time. We have specific guidelines that we look at the details. We get under the hood of that underlying and figure out what's going to make that engine run. All right. So for the best performance for what we're looking for. All right. So let's talk about the economic data across the pond. We're starting to get some economic data there in the form of Flash PMI, which is Purchasing Managers Index. Anything above 50 is expansion. Anything below 50 is contraction. So France, Germany, the major manufacturing sectors of the European region. So this should be something we need to take a look at. We've got the French Flash Services PMI coming in at 57.8, expected to be 52.3. Last month's number revised up from 50.3 to 50.7, still above that watermark, right? 50 is the expansion, anything above that. So we're seeing expansion in the service sector. Flash manufacturing for the French sector PMI missing on the headline number, but still above 50, coming in at 52, expected to be 53.1. German manufacturing PMI, Flash manufacturing PMI, was expected to actually be below 50, hit it right on the nose at 50, so showing expansion. They did revise last month's number up also slightly. German services manufacturing PMI coming in at 56.7, expected to be 50.4. The broader European region coming in with a manufacturing of 51.1, expected to be 50. Revised last month number up. European Flash Services PMI coming in at 53.6, expected to be 52, and revised last month's number up. All right. So what does that say? They've done pretty good across the pond. They beat on those headline numbers. Those are some of the most important numbers we look at for them. The European region, the flash estimates here in the United States, we get our ISM, which is the Institute for Supply Management. That's our most important data point. We do still get the flash data here, but everybody is looking for the ISM, which is the Institute for Supply Management. But since we got our manufacturing PMI, flash manufacturing PMI, coming in at 51.3, slightly lower than the 52 expected, and the services PMI missed, coming in at 49.6, so slightly below estimates there at 51. So we are more of a service economy here in the United States, and seeing that go below is a little bit painful there. But overall market's kind of shuttering the economic data across the pond and really taking it to heart here in the United States, that services PMI, which, it did show contraction there. So I can't knock that. But we did also get new home sales coming in at 776,000 units, expected to be 700,000 units. They are knocking it out of the park on these new home sales. People are out there shopping. They're talking about first-time buyers are coming out in full force. So despite the fact that we have like an 11% unemployment, we're seeing some houses get moved, and the days on the market, average days on the market, or actually, no, sorry, excuse me. The supply of homes on the market it was expected to be around 6 months, and it's actually below 5 months. So there is a very tight supply. That tight supply, demand there, increasing prices, okay? So we have strong demand, low supply, housing prices are ratcheting up in quite a bit in some places, to be quite honest. I mean, knocking it out of the park. I mean, talk about another housing bubble coming around while we're in a recession or in this type of economy. It's pretty crazy. Something else to note, looks like another round of stimulus coming mid-August, 75,000 or a household of 150,000. Below that, you're getting $1,200 per person and another $600 or $500 maybe per child. Looking to extend the unemployment bonus that is expected to expire this weekend. That's $600. Looks like it might be coming back. So it looks like they're trying to get another stimulus package for another $2 trillion. All right, so, it's funny. I'm not even going to go there. This is the trillion now. It used to be the million, then it was the billion, now it's the trillion. All right, so anyway, let's talk about the overall markets and what I've been up to lately. We've got crude oil coming off a little bit today, but holding on to $40 a barrel. We might see that continue to hold on there if we get this extra stimulus, because people are probably getting a little antsy and wanting to get out. I know that some people I have talked to are taking a lot of vacations, and they are doing that because they got a fifth wheel. Remember, we were talking about that on the bottoms when we were hitting those March lows, basically. I was talking about, hey, these guys like Thor Industries. Remember, we caught those guys down at the bottom. We're going to be knocking it out of the park, and it is seeming that there is very little supply out there for a fifth wheel, a pull behind, or even, I think the motorhomes, actually, there's some supply there. All right, so bonds just slightly higher on the day, as you can see, pretty much unchanged, but right there at the point of control we've been talking about, waiting for the volume node to shift higher and join its predecessor with the time node there. I expect that to kind of shift up. Something also to note, next week is huge with earnings. We've got a plethora of good earnings coming out, or good supply of earnings, I should say. And we also have the two-day meeting for the FOMC that we're going to be keeping an eye out there. I don't expect them to do anything, but it's probably going to be more talking about monetary policy than anything else. Gold, we lost the 1900 handle, but we did pierce above that earlier today. It looked like we were going to be able to hold on to it, to be quite honest. I thought it was going to go up there and come back down, but we put this down into break it down into a 15-minute chart. You can see we actually spent some decent amount of time above that, peeling above that 1900 area there. So market did go up there, trade. Now we're starting to see some profit taking going on, but we also saw the dollar break below a major support level there. So that also gave that gold future a move higher on there. All right, so VIX near the lows of the day, despite the fact, I mean, it is up on the day, but near its lows, and that's with the equities really having a tough time. Yesterday, we started seeing that late in the day, some downside pressure. As a matter of fact, NASDAQ was down over 200 points. We've got the Dow Jones here down 130 points on the day. We've got the NASDAQ down another 42, but creating a bit of a bottom here. The Dow Jones doesn't look as strong as the NASDAQ here, but you can see the NASDAQ really falling out of bed, going below that 9-day moving average, which is short-term bearishness. We probably are not going to close above that today. The theory has been on Fridays we've been getting some sell-offs usually, but the last couple of Fridays we've seen some strength heading into the last part of the day, where I would have expected to see more weakness. Especially summer markets, lack of volume there. That tells me that the retailer is coming in here and buying at these levels, especially on Fridays. They aren't too worried about news coming out over the weekend, it doesn't seem. Here we have the NASDAQ only off by about 50 points, but you can see well off the lows as the market is currently making a strong move to the upside. We can do this as a breakdown also and show you that for the most part, throw in the highlight extended hours so we can see that. You can see coming into the open, we got that economic data across the pond. Tried to get a little bit of strength coming in, but for the most part, our services sector number must have come out and made us really sell off. For the that's the best I can say. Intel is driving the market to the downside in some regards, and we'll talk about that here in a moment. But you can see strength for the better part of the morning at this point in time anyway. And the E-mini S&P is only off by about 17 points, but you're going to see a similar setup here where the sell-off happened right on the open, pierced those lows, but now making a strong comeback. Now, if we start seeing this chart set up the way it is, settling where we are or even slightly higher here, that is going to look like a pretty strong candlestick bottom, okay? We'll have to wait till Monday to see if it gets confirmed to the upside, but to me, it is looking like this upside isn't out of the realm of possibility, despite the fact that I'm expecting it to roll over a little bit, which I thought we were going to get today, especially right off the open, and see some weakness heading into the weekend. But this strength right now is kind of putting a wrench into my levers and pulleys there, but into the cogs, I should say, putting a wrench in the cogs or the gears. But you know, at the end of the day, we're going to have to keep an eye on what this market looks like at the close. All right, Intel. Now, yesterday I talked about this. I had my webinar, right? Well, I got a little bit behind the 8 ball there. I've got a lot of things going on. Forgot to do earnings. I got on on the call trying to mess with GoToWebinar a little bit early, trying to do some new things on the GoToWebinar. So I started playing around with that and completely spaced the Intel earnings. Thankfully, I didn't do any earnings in Intel, but I did come in today and sell some puts because they beat on their earnings. They are doing very well despite the fact that we've had this shutdown over in China for the longest time, and they've had a lot of headwinds coming into this. Well, they beat on their earnings. They beat on their top and bottom line for the most part. They've got all kinds of free cash flow. The market is slapping them for this 7 nanometer processor, that CPU processor that they are delayed on by 6 months. You know, they've done it. Same thing with the 14 and the 10. Okay, they're building these processors. They can never release them on time. Well, on the 14 and the 10. Nobody blinked about that. There was not a big deal, but for some reason today, all of a sudden, this 7 nanometer is a big deal. And to me, what's going on in the overall environment, everything else, and all the headwinds, does not seem like that big of a deal to me. So I decided to go in to the monthlies and take advantage of this, because usually what we see after earnings is what? And I talk about this in all my webinars as well, especially on the earnings webinars, which you guys should check out on how to take advantage of earnings if you want to trade options around that and make sure you're following those guidelines so you don't fall into the trap of what these guys on TV are talking about and just going out and buying calls ahead of it. But what we're talking about here, let me get this shut off, is we usually see volatility crush happening. You can see basically on some of the other ones, we're going to have to kind of take out the black swan event, but you can see that volatility right here really comes out right after those earnings. And if we look here, you can see the volatility really getting sucked out of these markets after the earnings. Now, again, here on this earnings, boom, get that volatility crush. Well, coming into this earnings, with this big, huge drop, at one point in time was over a 20% drop in Intel. Volatility expanded because people were rushing to buy puts and adding protection to their stock that they probably already own. Well, it was probably a little too late already to buy some puts or anything like that. But that gave me the opportunity, with volatility expanding and doing a face plant, forgetting about doing these earnings yesterday. I decided to go into the August and sold the 45 puts in there for 43 cents. So that puts me right down there in and around the just below this Fibonacci here, the 61 Fibonacci. I'd be happy to pick up Intel in and around these lows because I don't think that the stay-at-home trade is necessarily out the window at this point. I think that Intel, I talked about this yesterday with the Chromebooks. Intel processors go into Chromebooks. Well, our high school is pumping out like 5,000 Chromebooks to people. They have to purchase those from Microsoft, which I think will do very well, but Intel's going to do well also because demand from Microsoft to want to purchase more Intel Pentium processors or whatever is going to drive them higher as well. So I would be happy. I actually even considered just going out there and buying this stock for my portfolio, but decided, you know what, I'll take advantage of the high implied volatility and pricing. Maybe if we get more of a downswing, would be a good opportunity to buy some at around 45. I'd be happy to pick it up there. As a matter of fact, I'm not done debating myself on this trade. I may very well go out there and buy some Intel outright and say the heck with and do some dollar cost averaging with selling those puts. So keep your eye out on Twitter. I might just go out there and buy some. As a matter of fact, I'm just going to do it. I'm talking about it. We're going to do this right now, people. I'm going into my trading platform and I'm going to buy a half of my normal tranche on this. All right. Usually I like to say, massage it a little bit, work into that trade, but I ended up buying them right here I got 51.27 is my price on that. All right. So just fired away at those. So now I'm long Intel outright. I throw some puts in there where I can get some dollar cost averaging at 45. So I bought it at 51. I'll be more than willing to buy some more at 45 there on this trade. So I'm into Intel. All right, that's all I got for you guys so far. I think that's about it. I threw Microsoft up here. It's pushing higher today, which I think is a good thing for it. I think that Microsoft's probably a good buy as well. But I'm not in there. All right, so that's it. Check out the webinars, the roadmap to trading options. I go through step by step. I'm breaking it down. We're talking about Greeks. Yes, I'm talking about Greeks. But why? Because I'm trying to make it a little bit easier for you guys to remember and understand how those Greeks work. Give you guys little ways to implement that into your portfolio or into your trading regimen, actually. And we're doing that so that you understand the value of those Greeks there. All right, so check it out. Pro Trader Strategies, roadmap to trading options. Sign up for that course, especially right now. Getting in early is good because I kind of build on these webinars as we go along. So make sure you're catching them at the beginning, or you can check out some of our beginner to option strategies. And most importantly, right now, especially if you're an options trader, check out the earnings trades because we are full swing into earnings season. All right, that's all I got for you. Other than have a great weekend. Check out the disclaimer. Actually, the disclaimer I think is over there. Anyway, check it out. Have a great weekend. If you can't take that, take it easy.